Howdy, folks. It's Jeff Camarda. Good evening. It's Wednesday, August 5th, and a couple of quick things to report. First, I'm happy to announce that I've been accepted as a graduate student at the Georgetown University Law Center. Basically, it's an advanced law degree. Since I'm not an attorney, they call it a Master of Science in Law, Master's in Tax Law instead of an LLM, but it's exactly the same program. Pretty excited. Georgetown is widely considered the number 2 law school in the U.S. after NYU. I didn't apply to NYU because the curriculum at Georgetown was much more congruent with my interest in driving tax value for folks like you. So I'm very much looking forward to getting some real good, solid information that we can drive your wealth needle even more strenuously with. Sorry about that annoying buzz there. Second thing is, to talk about the market, which continues to really just balloon on nothing but hot air and exuberance. It seems like, case in point, Disney yesterday reported a nearly $5 billion loss, and the stock was up nearly 1%. So, as you know, and I know it's difficult to kind of sit here on the edge, but the odds in our view are overwhelmingly that the market is going to drop. August to September are historically the worst months for the market. In fact, I'm not sure that there's been a period where they've actually been up. The market is dancing within a hair's breadth of all-time highs. And while it's by no means certain we'll revisit the lows of March, though I personally think there's a really good shot that'll happen, given the disconnect between the economic and health conditions and where stock prices are. I think we'll have a really, really good opportunity to get at much lower prices. So we're maintaining that discipline with the expectation of being able to deploy there. And in the meanwhile, looking to take some to employ some short-term trading strategies intended to drive short-term profits. And while, as mentioned, these would be more taxable than long-term capital gains. And this year, I don't think many of you are going to care. If you do, please let your PWA know. And after netted against the long-term capital gains harvesting early this year, there probably wouldn't be much tax impact anyway. But it really is just astonishing to look at, and watching some of the political shows, how polarized the views have become between, is COVID a dangerous disease or is it just kind of an overblown hoax? And it's just astonishing at some of these opinions and how discounted or taken for granted it is. Just driving around Florida with Dylan, we went out today for the first time in weeks, really, just to get out of the house and drive around. The streets are full of cars. People are going to work. Some kids are, going back to school or getting ready to go back to school. And talking to some folks up in New York yesterday who are kind of on a tail end of this, where, as I think I mentioned in the video, last time perhaps, where they're kind of in shock. There are people that are refusing to go to work. As one guy we talked to that owns a car dealership, and nobody will show up. He's working 100-hour weeks because his employees are afraid to come to work and catch the virus and bring it home to their kids. And many businesses, you can't go in. They won't admit you unless you sign a liability waiver that if you get COVID, you're not going to sue them. I think we're a long way from being through this. And in many ways, the worst is yet to come, and I think that'll eventually be reflected in stock prices. So we're being patient, kind of biting our tongues, waiting, for what we expect to happen, but patient nonetheless. The last thing I want to mention is we've taken positions in gold and some other of these months ago, really. The sectors that we expected to do well in the COVID times and have done well. And it's just an interesting aside. One of the reasons that gold is doing so well, perhaps the primary reason, is because the dollar has been dropping. And why is that? If you haven't been paying much attention, the reason the dollar is dropping, number one currency in the world, is because U.S. interest rates have gone down big time and they're now more normalized or closer to where the rest of the world has been for some time post-Great Recession, which is now, 11 years ago. And the other thing to consider is that the reason that interest rates are so low and probably will go lower, driving the dollar lower, is because the economy is really in such dire straits. And it's likely the Fed, although they put a happier spin on it, is pretty much out of ammunition. And unless the executive and the legislative branches in Washington get together, pull out the stops and start spending money, fiscal stimulus, spending money like mad to support jobs in the economy, there's probably not a whole lot left that government can do. And I think they eventually will. We must. There really is no alternative to that. But bear in mind, the dark side of that is that inflation, which has been dormant for decades now, decades. It's kind of like the boogeyman in the closet nobody expects to ever see. These conditions really are very, very stimulatory for inflation, and don't be surprised to see prices start to hike really big time as we come out of the COVID deep recession. Anyway, that's more than enough for today. Thank you for suffering through that. Looking forward to doing our next class. Hopefully you've enjoyed the classes. Pass it on to your friends. You should be getting an invitation within a week or 10 days. And the next class is going to be Asset Protection 101. Protecting risk management and how to protect your wealth. I think you'll find it very interesting and useful. So please mark your calendars once the date is finalized and circulate that to your friends and family. I'm sure they'll enjoy the class even if we never get a chance to talk to them. Okay, that's it. Adios. Good evening. Until tomorrow, Thursday. Dr. Jeff Camarda signing out. Be safe, be well, be loving. Bye.